Hi everyone, hope you guys are good and well. We're still here in South Korea in one of the castles and palaces here to help answer all of the questions that you've sent out via social media with the entire goal and heart to help you reach your goals of financial freedom. So if you're new to this Facebook page or this YouTube channel, feel free to subscribe and like the page so you get updated every time we have new content. Now, I'd like to answer the question, what are you supposed to do if you are losing in a stock? Should you cut your losses? Or should you hold your positions? Or is it even wise to just consider even cutting your losses? You have to understand, especially for new investors, no, if a stock goes down and you do not sell, you are still at a paper loss. You don't actually lose anything yet. However, once you start selling, that's when you actualize the losses, and that's when you really lose money. And a lot of investors have been hesitating through the years now. Should they actually sell? Should they actually actualize that loss and experience really losing real money? Because people keep having this notion that if I don't sell my stock, I just wait for it, it will actually go back up over the long term. Yes and no. Here's the thing, if you're an investor and you are buying an amazing company, if it goes down in price, for sure, good companies go back up. Good companies that are growing and have a durable competitive advantage will always go up. However, you don't know how long it will take before it goes up. You don't know if it may take years or even months before it goes up, and the opportunity for you to make money may be lost as well. So why am I saying this? If you are an investor and then you bought a bad company, meaning the fundamentals isn't really there. You bought a bad company that its earnings are declining, its company is so laden into debt, it had negative earnings, it's actually losing money. Cut your losses right away. Rid yourself of the stress of holding on to a losing company. Try to find better use for your cash and transfer it into something that has a larger potential for you to make money anyways. So what's gonna happen if you buy a good company naman? If it's a good company and you're an investor, by all means you can hold on to it. However, if the company is bad or it turns bad, please sell. Even if you're an investor, even if your timeline is long, please remember this. No matter how long you hold on to your stock, if it's still a bad company, if it's still in a losing position, it won't really generate good returns for you. It won't really give you a semblance that it could possibly go up, even no matter how long you hold on to it. Please remember this, a bad company will continue to go down until something changes or shifts in it. Now, if you're a trader, automatic, you need to cut loss. I repeat, if you're a trader, you need to cut loss. If you're at a losing position, you need to cut loss. If you're a position trader and the stock has reversed into a downtrend, you need to sell, you need to cut your losses. Because you don't know how low it will go. You don't know if it will be the next CEMEX. You don't know if it will be the next SSI. You don't know if it will be the next Del Monte. You don't know how low it can possibly go. Now, if you're a quick trader, same thing. The more you should actually sell. Why? If those support lines break, you need to sell, you need to get out of that position, and then you need to transfer your cash to a better stock that will give you a possibility for earning more. You have to remember this, that cash is king. You have to remember this, that if you trade with an intention to earn from the volatility, you also need to learn that if the trade doesn't go your way, you need to cut your losses and you need to sell. It's a very, very important tool to protect you, because larger drops may take a long time before it would go back up. And cutting your losses with a small amount of loss, that can easily be you can easily recoup that loss by just transferring your stock to a winning trade. You can easily recoup that loss because you get protected from holding a very, very long position with a very, very bad stock. And believe me, I've had areas like that, especially when I was starting out, that I just say, sige, just wait for it na lang. And eventually I cut my losses, and that's the best way to do it. Why? Because I've seen stocks from 2008, 2009, 2010 that have dropped in significant levels until now. 10 years, 11 years have passed. They really haven't gone back up to where they were before. So if you have any hesitation to cut losses, please study the stock very well before you come in. You need to know why you're buying the stock, and you need to set a condition also that will cause you to sell it. That's why it's very, very important to only expose yourself to an amount that you are that you can actually tolerate if it doesn't go your way. Meaning, if a stock goes down without blinking, you cut your losses. Meaning, if the trade is not in your favor, you cut your losses as well. We sometimes hesitate to cut our losses because the amount that we put, the amount that we expose ourselves in, is something that's above and beyond what we can tolerate. So one way to protect yourself is just put an amount that if it goes the wrong direction, sell, cut. One way to protect yourself is to just use the charts, just use technical analysis, and try to be automatic with it. If it doesn't go your way, sell, get out of that position, and use your money to make better trades elsewhere. You have to remember this. You don't have to be right all the time, but you have to know that when you're wrong, you're out, but when you're right, you maximize it to the fullest extent of the law. So that's it for now. I hope this video helps you trade well, trade strong, trade smart. More videos from South Korea. God bless you all.